What's up, everyone, and welcome back. Today, I'll be sharing an exclusive live stream I did on where I went more in depth on how I approach Asia and London session, as well as how I look to trade it. Everything from the higher time frame where I get my bias to the intraday execution in itself. And alongside with that, I'll also be answering some questions along the way since it was a stream. So if you find this video valuable, please leave a like and a comment on what you want to see next. But with that said, let's get right into it. All right, the recording is started. So as said, I will be going over how to approach Asia and London session and when to look for potential entries on that. So we have an example on the 9th of October. This is an example where if we start on the daily, we can see we are in all-time highs territorium. So really anything can happen up here. We do have a bullish close. So initially going into the next day, we can look for higher prices. And again, we only have one key level really, which is previous day high. So we're going to mark that out. And if we are to expand higher, we either want to see price. Wait, let me drop down to a lower time frame because I can't draw here. We either want to see price do something like this, creating a failure swings with previous day high and then some sort of daily profile in respect to 50% of previous day, and then look to expand, or move through previous day high where we fail to manipulate and then look for a move higher, right? If that's not the case, then we can use previous day high as a potential reversal area. So if we just mark that out here, and this is Wednesday we just had. So wait, I will just split it up just to get an easier overview. We have right there and there and there. So it's been a bit of a consolidating week, right? We do have failure swings near the lows here, but Monday going a bit higher. Tuesday, again, previous day highs marked out, only relevant level. We manipulate that and then reverse. And then Wednesday starts expanding again. So we only have this key level. So let's drop down to, let's say, a 30-minute here to see what price does at the open. We can see we engages that previous day high fairly quickly. So here we can potentially look for a continuation signature if that's the idea of trading higher, which is not really what we get here, right? We actually get a rejection fairly shortly after. So we actually get a full-on change state of delivery after taking out this key level previous day high on both the 15-minute and the 30-minute, as you guys can see here. So here we can potentially look for a continuation to the downside with this small opposing wick sweeping into a key level. So we would want some opposing close candles with a decent range, or it might just run. Let's see if we can get that. So we do get that here. So we would demand a new close below here. We also tap into this gap, which can act as extra confluence. So we would demand a new close below, which it goes a bit higher. And then I think we get that close. The stop is, it's not even that bad. So you could look to enter right on the close of that and then look for right around 2R, or maybe align it so it would fit here. So maybe put a limit right there at 2R so it would fit to this gap, which seems like a pretty good target. This hourly gap and 30-minute, and even if you go to a 15-minute, it's a relevant low, I would say, because the next low would be all the way down here. So look for something like this, where you get filled on that next candle, I believe. Yeah, so you could even go for like a full-on retest on this, but let's just take this as an example because it offers 2R, right? Although this is pretty choppy, I don't think it invalidates. Yeah, so we have 930 coming through here, and then we start to get that follow through that ideally we would want it to get it earlier, but as said, we know that price can chop around for an uncertain amount of time without actually invalidating the setup. Obviously, we would like speed once we're in, but that's just not always the case. And even here where we consolidate for what, 4 hours, it's still completely valid, right? There's no need to trail stop too early or take partials. Obviously, we're not in profit, so we're just gonna let it play out. And then you get 930, which kind of confirms your idea, which is nice to see. I think this was a bit of choppy intraday, if I'm not mistaken. Yeah, but eventually it goes there to that low and a little bit further. But if we drop down to a 15-minute, we can see how it is pretty choppy intraday. Ideally, we would have wanted this to go like right away lower. But actually, even if you just trailed it on the 5-minute here, let me show you. Like once we close below here, we would not want to see return up there. Even if you use this very small candle, since we don't have any opposing close candles in this series here, then you would have your stop at this high, right? Let me see if I can make this another color to illustrate it a little bit better. There we go. So your stop would go here. And then even if you're looking to trail it quickly, which I wouldn't recommend here, your target is 2R, so I would most likely just let it go or watch ES. Like if ES is way strong, way weaker and goes to take a relevant level, then you can look to partial or, protect your position. But we don't even get the close here, so you would still keep your stop up here, which never gets reached. So once you do get that close down here, actually this one right there, since this makes a new high, technically speaking, then you can trail it to that high and then it would hit right after. Or I wouldn't even micromanage it, but just an example, like even if you did on the 5-minute, it would still play out, although it has some large retracements. So yeah, this is one example where we engage the only relevant key, the only key level we have here, the only relevant level, and then we get a reaction and a clear setup from here. And this is where you want to be patient, right? And just set your alerts and walk away. This is where set and forget is perfect. Exactly. Yeah, so really just set and forget. That is so underrated. All right, that was the first example. So let me get into the next one, which is gonna be the 17th of October. If we just play this forward a little bit. All right, so yeah, here. So starting on the daily, I would kind of disregard this since these highs and lows are not really relevant since they're this far away. This was formed due to the Trump news, I believe. So I would be more focused on the intra-week price action, which would be here. Let me just mark it out for the visuals again, so it's a bit easier to get an overview. And there we go. Right. So we have Monday here, which is kind of just consolidating. Again, going into Tuesday, we have two key levels, which is going to be previous day high and previous day low. And ultimately these highs if we get closer to them and these lows. But here you actually, wait, let me, nah, you don't really have any valid entries here, I think. Would you guys see how this is the only relevant level again? We engaged at previous day high. Here we don't really have any continuation signatures because it kind of just runs. But down to this low, you actually do down here. Wait, let me see. I would most likely use these since these opposing close candles are not very wide. I don't know if this offered 2R. Let me have a look. So it actually does offer right around 2R. So this would be the same. Also, if you mark out this relevant low, which would be the only one relevant before previous day low, we failed to manipulate here, right? Into this gap. This is not even an example I had. I just saw it. So you can see it pretty quickly when it happens, right? And this would also be the intro week low since we only had Monday. So that was just a sidetrack, but exact same logic here. Let me get into the actual example. Yeah, so as we can see here, we engage with previous day low, and then we bounce shortly after 9:30, resweeps it as well, and then we bounce back towards the weekly high. So it's just playing around, kind of seek and destroy into a week where we take out the high, we take the low, we go back to the high, and then we reverse here. Where we fail to reverse, we can see this is it's not even the 9 o'clock. I think we might have had some news or something. I'm not sure. Anyways, so we fail to reverse here, and then we come up to this high on Thursday. And what do we do here? We take out previous day high again, and we reverse. And where do we close? We close near the low of the day. If you look at the daily, it's not an entirely bearish close, but still pretty far away from the high, right? Near the low. So where would your eyes go? They would go to the opposing side of the range, which would be that low since we already engaged this. So if we get a continuation signature further lower, we're failing to manipulate this only relevant level. And the next one would then be the intra-week low and also the opposing side of the range. So if you go to a 4-hour, it's a bit clear here, which leads us into Friday, where you have a pretty clear framework for that day. You would mark out, I would most likely go with this. Wait, how far is that? Yeah. So I'm not sure how I would use the 50% here, because the whole candle would be, you wouldn't really have a lot of room just due to how it has wicks on both sides. Usually I'm going to use the wick for reversal candles. But ideally you wouldn't want to see a 250 opposing run, right? So the expectation is still to see further downside going into Friday. So if we just drop down to a 30-minute here, we can play it through a little bit. So we can see how we sweep this. I'm gonna pull up ES. Because if we have a look at ES real quick, we can see how we fail to take that high. So we have an SMT here. And we have an SMT right here, right? So once you get this close, since it's already in the continuation of the higher time frames, and this is after the new daily open, we sweep that relevant level, creating an SMT. You can then look to enter here, or on the open of the next candle, which would be here, right? Due to the close, stop goes to the high. And then you would look for 2-hour first potentially, but this would be your target. Or if ES sweeps it first, then you would look to scale. So what happens if we play it through a little bit? I think we do come back to test the range. Yeah, as you can see, we actually come like fairly quickly to the stop, but it doesn't matter as long as the stop is still valid, which it is. And then you get, I think this was even prior to open. Yeah, you can see this is at 4. So in London, you don't even get to open prior to this happening. So again, this is an exact A+. And honestly, I do love indices intraday on New York when they're clean on the lower time frames. But this is my go-to setups if I get the chance, but they're not offered as often as intraday setups. But that's why, because obviously I don't really do this live on the streams, but I want to teach you guys since, yeah, it's essentially even higher probabilities, I would say. So I'm going to start looking at the week on the hourly time frame, separate it into days like this, makes it so clear. Yeah. And this is one of my go-to setups. That's also why I feel like it's important to try to explain it as well. So that one being the next setup, we actually had 2 overnight sessions, overnight setups this week. I was testing this on gold, seemed way easier to me. Yeah, gold do offer a bit more of like setups prior to New York because it doesn't really have 930 volatility driver the same way that indices do. Because like the official New York Stock Exchange is at like 930, whereas gold don't really have that time. So usually you can find pretty clean moves on gold with like the 15-minute or 30-minute as well. But I will go over a gold example in a bit, but this was more to show how you could do it on indices because I feel like a lot of people have been asking about that as well. And we focus a lot on like the intra-week price action, essentially. And then obviously the daily closes. The daily closes tells us a lot. So if you guys saw from last week, I will also go over that in a little second. How much if we engage a relevant level, we have opposing draw, we close towards the opposing draw, and we still have range left. Then you can look to trade that. This day I had a cool 15-minute entry around London session after failing to manipulate the hourly swing. Oh yeah, here. Yo, that's kind of fire. See, this is a potential place where you can even pyramid if you are in that initial position. So once you get this sweep into, well, you have a gap here too, but also a wider range, you get the close. Then you would look to take this, stop goes there, and then target the low as well. So if you did this properly with these entries, you would net around 5R while never risking more than 1R essentially. So you guys can see how if you get these proper setups and execute properly on them, you can even win big sometimes without, going for some insane 1 minute entries or anything. But this is like very high probability in my eyes. So yeah, exactly, Nero. That's beautiful. Yeah, you have that failure to manipulate right here. So I need to make a template for the failure to manipulate, so I don't need to type it. Wait, let me do that right now, actually. So if we throw it on the bottom, there we go. See, you guys can see here, this is the exact same logic that we teach. So with that said, let's go into the next example, which is going to be the 5th of November. So not too long ago. Let me just delete this. Boom, boom, boom. What did I say? Yeah, 5th of November. Oh yeah, this is a trade I took. So this is a little bit more twisted, but still. So I'm gonna mark out that weekly open and then the different days. I think it should do it. Oh, that's way easier to do it like this. But here, essentially, so starting off the daily, we're kind of, in this range where we're failing to do anything significant. So we reversed off the highs here and we got some follow through the next day, but we're failing to get down to the low. So we're kind of just consolidating up here. But then you get this breakout signature essentially where you come down and tap this relevant low. And what happens? We come back, we retest it, but we fail to manipulate it. Also the way how deep it trades through that. So we come up here at, I think it's a New York open, it is. We come up, retest it, and then we go lower, right? So with this idea, then I'm looking to frame it as usual, as this being the breakout, and then look for a potential continuation lower, where being in respect to 50% of the previous day. So here, I took this entry. If you guys don't remember, you can go back and check the trades section. This is a bit more of an aggressive entry, I would say. So we have the daily open here. And essentially we have this. I do think we have an SMT with... yes, let me have a look. Yeah, so we do have... I think it was into the gap on NQ. We don't really have a significant gap, but the small gap here, it's not really significant at all, actually. But we do have an SMT where ES taps into that. So an SMT here, where we then get the close below on this. This is a bit more clear on the 30-minute as well. But once we get that close, then I just took a short position with stop going here. And I was just looking for, I think 2 to 3R. Wait, let me have a look what I was targeting. I think I was targeting, yeah, just 2 to 3R essentially. I think it was right around 2.5 maybe. But this would be your first place to potentially look to scale or trail, right? So if we play through a bit, I think this had pretty quickly follow through. Yeah, so this was pretty insane actually. I think it netted 2.5. If you guys want, you can go back and check. This is kind of insane, and this doesn't happen very often. You get this kind of follow through in Asia on indices, but nonetheless, it did go there, and then it actually ended up retracing all the way, I think. Yeah, so back to the daily open, which would kind of invalidate the short thesis going into New York, just due to how it's failing to hold down that move. We moved almost 300 points to the downside and then all the way back up. So, all right. If you guys have any questions, feel free to ask. If not, I will just go on. So we got two more examples to go through, one being on gold. I will just take that now. It's going to be the 28th of October. Let me see if, yeah, that would have been the correct way. So here, the next point of interest. So we have these relevant levels. This is a Monday, so we don't really have a lot of weekly context here, but we have this relevant low, which we're kind of closing through. So this would be like a, failure to manipulate when we close back into the range. Whereas if we get these close, we can most likely expect a continuation. But I'm gonna mark out 50% of this to use as our next daily candle. And then we have this draw, right? Which is going to be that first potential area of interest, these relevant lows. We don't really have anything prior to that. And as you guys can see, if I just mark this out and make it, where's my failure to manipulate? Didn't I just make that? Oh, it's because it's in another tab, so it hasn't actually saved it yet. Oh well. Yeah, we have this relevant level that we kind of come back up to, and then we get a new close below. So we can expect further downside. Let me see if I can actually remember what I took here. All right, so we don't really get any closes below here. We do have previous day low lined up here. Let me see what we get. All right, so we don't get that close, which we kind of would have demanded here. So now we're this close to that high, so we're expecting a short-term run on this high for potential to reverse. This would be the last area of interest where it would have to reverse for further downside, while still being in respect to 50% of the previous day. So let's see if we actually get something here. Wait, let me have a look. Did we have an SMT at the high? I'm not sure. We didn't even have that. I'm not sure we get an entry in this. So we do have that close here, but obviously, we don't even have the close. Never mind. We get the final close there, but obviously this would be way too big of a stop. So you would look to, I'm not sure you even get a proper continuation signature. I think this is the only one offered, if I'm not mistaken. Like the close below here. Well, technically, yeah, this one. Yeah, actually, I don't. Oh, wait, you get the continuation signature here. And let me have a look if there's SMT. There's not. Okay. Doesn't matter too much. But I think this is a proper range. It's almost 10 points. Would be a bit more with this stop, but it's a pretty convincing stop. Where you also engage that previous day low, which is going to be that relevant level. And then you get a failure to manipulate, right? We come down, we tried to manipulate it, go back up. We failed to do so. So you can look to enter with what line aligns with a 2R-ish to that daily low, or right around there. Then you would look for 2R. In this case, you can potentially trail it a bit prior if it does come down to this daily gap, which is probably what I would do in this. Or you can go for a bit of a better fill. Not sure you will get the retest. Yeah. So this is not entirely A+, just due to how it's not really offering 2R to that low. But it usually goes a bit further when you get those key levels that we haven't visited in a long time on gold as well as indices. So you can look for that 2R, but potentially you have the chance to get trailed out break even if you trail it here, obviously. Yeah, it does go a bit further, but it actually goes a lot further. So you could even have entered like near the open of this and gotten 2R, if I'm not mistaken. Yeah, you could. So that would be an example on gold. And then let me get to the last one on NQ, which is going to be this Friday, actually. I'm just going to walk you guys through that. Which would be, if we play it back here. Again, we have Monday, Tuesday, Wednesday, Thursday. There we go. If we just take a look at the daily first, as well as ES, we can see how we have an SMT here. This candle. So if we go back to NQ, we have an SMT right there into that gap that we have formed here on NQ. I can mark it out. And then we also have a C2, so a reversal candle here on the daily, where it's not the most convincing close on Wednesday, just due to how it's not closing entirely near the lows. So let me drop down to an hourly. But going into, I'll just mark out the SMT here. We can see that we have all these failure swings. Oops. So all of these failure swings that we have here just keep making slowly higher highs, right? And we're failing to get any significant reaction. But once we do engage with them, again, failing to manipulate this. And we also engage with the intra-week low here, where we're also failing to get any reaction. And we close very bearish, almost down 600 points on the day. And what do we have open coming into the next day? We have this clear draw on the daily, as well as like if you look at the 4 hour, etc., it's all very like this one stands out a lot. This is also what I shared in the analysis channel the day prior. So how would you approach that? Ideally, you would want it to see respect this, ideally even lower, because we still have 270 points up to that high. And the likelihood of us going 270 points that way, and then like almost 400 points down, that would be almost a 700 point day with a large wick. So this one being a small wick, we have 700 points. Although it's a bit above average, you wouldn't expect it to with a large opposing wick. So ideally you would want it to form a small one and then continue lower, right? So we can look at this on like a hourly 30-minute. Again, you would mark out previous day low, but in this case, it wouldn't really be relevant just due to how we have a very clear opposing draw here. And there's not really anything to it. Yes, we do have the chance to, like obviously you wouldn't want to short if you just get this signature right away. So we'll just mark it out for the sake of it. But once you get, right, let me have a look. I don't know when we get it. So right now I'm looking at also on the hourly, you will want to close below here for a continuation in this range. And when it's on the hourly, it's even higher probability. You can look on the 30-minute as well, right? We play it through a bit, and this would still be the close since this high doesn't get swept. So you would still be looking for this close. Play it through a bit. You do get it here. So you can look for an entry here, stop above that high, and down to that low, which would offer 2.5R in this case. If we play it through a bit, you can also wait if you want, just due to how we come down in gauge previous day low. You can wait for the next signature through, which would be right around here. So I don't know what your RR is going to be here. It's going to be 1.8. So you would go for like a minimum of 2R for the retest, right? You're most likely going to get filled on the next retrace. Yeah, you get filled right there, having previous day low marked right here. And then we come down, we tap it, we reverse, but we're failing to reverse. So we get this new close. It might look a bit cluttered right now. But once we get the new close, then we should return back up to this high, right? And then you can play it through. It's a bit choppy, but never invalidates anything. And then I think we start to get some follow through. Yes, this happened on Friday. So honestly, I don't really think there was any more entries. This is just very small. I mean, I think it would be okay to try for this entry, but these are high probabilities in my opinion. And then you don't really get anything proper, when it drops here. Because once you get the close below this one, it's already down here. And you don't really get any retraces. So yeah. Can you explain a bit when you choose between the hourly 30-minute and 15-minute? So usually I'm gonna be okay with like 15-minute and 30-minute on in Asia and London, etc. But if you have that same signature on the 30-minute, which aligns with like a 15-minute, and you get the close on both, then it's just extra, higher conviction. Especially if like once you get that 15-minute close, it also closes on the 30-minute. So let's say you get both of the closes at the same time, then you can, well, technically enter on the 30-minute, even though it's both time frames. So it's rarely the hourly, although this, I think it gave the 30-minute hourly. Yeah, it gave both closes at the same time, as you can see. The 15-minute, I mean, technically you even got the 15-minute here. I think that would be a little bit aggressive maybe, but nonetheless, it would actually have worked out if you did short here. That would have given like insane R, almost 5. It doesn't actually come to the stop, so even the 15-minute being aggressive here would have worked. So, yep. I hope that made sense, guys. I feel like it was some good examples I went through that explains like the majority of what I look for. So, if you guys have any questions, feel free to ask away. If not, then yeah, let me grab some water. I'll just wait a second for any questions. If not, I will get right into run through a week trying to get idea on how trying to get an idea on high versus low probability setups. I mean, low probability setups are essentially anything but when you have daily closes. So let's say here. Okay, let me just mark out the daily again. Right there. All right. So essentially here, I don't blame anyone for, let's say we're looking for shorts. We have previous day high here. We come up, we close somewhat near the lows, not entirely close to them. And we do have these failure swings below. Then you could also look for it going into Asia here. But obviously you don't get any entries at all. Like not 30-minute, 15-minute, etc. You just get a moon candle here, which would be like you wouldn't be too interested after you get like a 200 point move up from the lows. Not for a high probability, but obviously it does. Like even once you do get that initial reversal here, you get the continuation signature. This is kind of an insane candle here. Like even if you were to enter in somewhere in here, with your stop above that, you can see how it would actually have offered. But you have the potential risk of price reversing at these lows, since that, well, actually this is the intra-week low, so you could potentially look to target that. So even here on this day, although you get that opposing move that makes it a lower probability, you do get the follow through once it forms, although it takes a lot of time. So, but usually, like if you get let's say here, this is a good example. Essentially all other days are low probability in terms of, Asia and London session, I would say. So let's say here, you have Tuesday coming in. We are engaging with Monday's high, but we're failing to take the opposing side. And we close like in the middle of the candle, right? What would you look for here? Would you look for shorts? We have failure swings at the lows. Would you look for longs? We close to these highs, so you wouldn't really know exactly what to look for. Often when you have like very one-sided framework, that's where it's higher probability. If you pair that with like external and relevant swing points and daily closes, that's usually where you get the proper framework. Great examples. I noticed too that this approach works well when I did my hindsight trading. Yeah, exactly. Now it's time to apply it to the real charts. No rush. Last Friday, somewhere on here took an hourly position on gold. Yeah, I can review that as well. I know exactly what you're talking about. So if we just go to, I'll just hop here. All right. Daily again. What do we have here? We have Monday, Tuesday, Wednesday, Thursday, Friday, right there. On the daily, we have a clear again, sweep of previous day high, bearish close, close near the lows. So again, here you have a reversal wick. So if you want to use anything, you would use 50% of the wick for looking for a daily profile to form within in respect to that. So we get this, where we then have 18 open here. We come up, and if we look at XAU Euro real quick, we can see that we sweep this high. So if we go back on gold, where we don't sweep the high, so it's not considered a failure swing, right? Let me remove this. So we do have an SMT up here. And then we have an hourly reversal here, whereas you get this up close candle on the hourly again as well, and you get a close below. So the position you would look for here would be to that hourly, stop goes to the high, and then you would look for some around 2R, and potentially even if you zoom out to the daily, potentially look back to this daily gap. I actually would do that after 2R, since it makes sense in terms of the weekly profile as well. We have a clear reversal candle here, so we are expecting an expansion candle the next day. So this being the 2R, where you could potentially look to scale or trail, and then you would take your full position somewhere around here, or even just hold it, which offered 3.6R, right? So exactly like that. That is how you would approach it. I think you get the same signature on the 30. You don't actually, because you don't get the close. Oh well. So in this case, the hourly is actually better because you don't get that same signature on. Well, you do have the 15-minute close here. So this could also be used. You wouldn't really want to use this. Let me mark it out on the 15 as well. You can also pair the hourly close you get here with the 15-minute entry. So you don't necessarily need to see the reversal and the continuation form on the exact same time frame, right? So you can kind of combine them. But even if you were just using the 15-minute, I mean, technically speaking, it would be up here. So let me just mark that out. But let's say you wanted the hourly confirmation. Sorry, I'm messing around right now. You want the hourly confirmation, you get it here on the open of the 2 o'clock candle, which is going to be right there. Then you can look for a potential entry on the 15-minute example. So this being the first one, because it goes up, makes the high. Then we come up, we make another high. So that would be the close of here. So once you get this close below, then you can look to take a 15-minute entry, which again, I think it would be around the same of the hourly entry if I'm not even mistaken. Yeah, so it would essentially be the same. So here you get the hourly and the 15-minute paired again for entry. And then you would look to target that same 2 hour, 3 hour, and ultimately to this daily gap.